With China further cracking down on Bitcoin mining, fear and greed index showing almost single-digit numbers at this point, and generally a downturn in the markets, let's perform an update here to see where things are. And I'm also going to round things off with some additional Hopium, as I'm sure we all need it right now. If you enjoyed today's content, make sure you subscribe to the channel and consider supporting me via Patreon, link down below. So the market's looking particularly red today. Over the last 24 hours, many double-digit losses. The only things in the green are pretty much Tether, USDC, and other stablecoins. We do have one performer here, Pirate Chain, which is essentially a privacy-focused cryptocurrency similar to Monero, but a lot younger, but nothing to really write home about right now. As you can see, these are pretty much all stablecoins listed here, and even some of the coins with the lowest amount of loss here are also stables that have not quite held their peg. So overall, pretty bloody situation in crypto land. And as a result of this, moving towards the low 30k region for Bitcoin, the Richter scale for fear and greed now reads at a number 10. Will we see single digits during this week? We will wait and see, but the sentiment of the market seems very bearish right now, and a lot of individuals are starting to cash their chips in and capitulation is occurring. So does this mean we're really close to the bottom, or will things continue to slide further? So this is the chart we left up on Friday. So it was Friday the 18th, and at the time of filming we were right around here. Bitcoin was around 38k, and we were hoping for a retest of this area of resistance as a new support before moving higher onwards and upwards. Unfortunately, that did not occur. We broke down on Friday, and going into Saturday we were around 36k. Over Sunday we've seen some volatile price action wicking all the way down to 33.5k before moving back up for a close at around 35.5k. And then Monday, well, who needs to be told about yesterday? It was a very bad day with a huge sell-off all the way down to the low 31k region. And today we're starting to see a bit more of a fight back. But as you can see from this wick here, the bears are fully in control right now as we try to recover this downtrend. But is this downtrend now invalidated? Should we be looking at a new trend here? And is this maybe a bit optimistic from me? Are we just going to continue seeing this 40k to low 30k crab market region bouncing between these continually, or are we going to see a sustained breakout either to the downside or to the upside? I will leave that for you to decide, but it does feel like if we broke below 30k for a candle close, it would be full Wojak mode across crypto land. But it's often worth remembering, every time we go up to this region around 40k, everyone's calling for 50 and 60k, and as soon as we go to the low 30ks, people are calling for 20k and even 10k in some instances. So this really is just the volatility of the crypto markets and the bipolar nature of the participants within it. Clearly the main driving force of all this downtrend is the China intensifying their crypto mining crackdown, as notified here by CNBC. Many Bitcoin miners in the Sichuan province were shuttered Sunday after authorities in the southwest Chinese province ordered a halt on the crypto mining there, and we're seeing wide-scale shutdowns across the whole of the country, but specific regions have been pretty much told to shut up shop before the end of this month. But is this overall a negative thing? Well, clearly in the short term it's affecting the markets quite substantially, but over time, we're going to probably see that this is a positive thing, seen as between 65, 70, even 75% has been quoted within some of these articles as the percentage of total Bitcoin mining occurring in China, which makes China a very centralized place for crypto mining. And we want to see that diversified across the globe to fully decentralize the network. We don't want single areas having huge amounts of control. So over time, this will lessen the impact of China FUD. But of course, we're living through what seems to be a very bad time, whilst the impact of these changes is really felt. So short term bad, but long term this is definitely good for the health of the crypto economy. Many of these Chinese miners shutting down operations. You can see the huge scale of these things, warehouses full of these ASICs, and they seem to be moving towards the USA, and even Russia has been quoted as a new home for many of these miners. So once the dust does settle, we will see a more distributed Bitcoin mining network. And so I find this tweet just spot on for right now. People say they won't buy Bitcoin because China controls it. And then on the flip side, I sold my Bitcoin because China banned it. So will this mean that all those who were fearful of China controlling too much of the hash rate now turn back and buy into Bitcoin once again? We will wait and see. The hash rate, of course, is taking a bit of a battering here. Clearly, the trend is your friend. We are continually pushing up with this Bitcoin hash rate. But over the last week, we've gone from around 185 equihashes all the way down to around 120 odd equihashes. So this is a large oscillation as we trend higher. But what we do know is when this occurs, hash rate drops, it means that the mining difficulty will then drop as well. And so it means others who were maybe not profitable at mining previously can now enter the game. So these dips in mining hash power are always eaten back up. And if we just zoom out here, history will show us the Bitcoin hash rate will continue to climb higher and higher as Bitcoin gains more value. Now, upon my morning routine of watching crypto videos, I did see the video from EllioTrades yesterday, his first real bearish video calling for a kind of bear market here for at least a few months. And he goes on to suggest that his Hopium got rugged after the rejection around that 42K region, this one around here on the chart, and then at the break of the 37.5K region. And he says he should have stuck with his guns and pulled out after a 50% plus correction in Bitcoin price. That being said, he's looking for a recovery in the few months ahead after some serious pain. But for those asking, he's not sold long-term positions of Bitcoin or Ethereum. He also mentioned he's not sold any Akash, but his other exotic altcoins have been sold off into stable coins. So he has turned from bull to bear right now. Is this a bottom signal, or is he playing it very smart right now? Let me know down below what your thoughts are on this and if you've seen that video. And I do also wonder whether he's sold off his super farm stack at this point. So let's wrap things up with a bit of a Hopium section here for all of us in need of that. So on Glassnodes, they record the Hodl Waves, and these are the realized cap Hodl Waves here. Essentially, a Hodl Wave represents a macro view of the age distribution of the coin supply and provides insights into changes to this age distribution arising from holding and spending behavior. So from this chart, we have these warmer colors all highlighted. So these are young coins, and this is defined by the age from which they were last spent. So this often indicates older coins moving from an old state into a young state as they are spent. Now, during each of the previous market cycles, when we've had peaks in these new young coins, as denoted from these waves up here, you will see on the price chart, we have a parabolic move and then a price correction. Again, parabolic move, price correction. And this plays out each and every time in 3 waves across all of these market cycles. So clearly when we get overly bullish, older coins, stronger hands decide to sell their Bitcoin and cash in some of those gains, and the price corrects. But then we play the game again, and then for a third and final time. But according to this metric here, we've only experienced this for the first time in the 2021 bull market. And typically you can see that these progress with increased spending of these older coins as the market cycle continues. So we've had wave 1, but are we due a wave 2 and a subsequent wave 3? This would obviously indicate a lengthening crypto cycle, and so this correction should be followed by further upside down the line. Of course, it's hard to put timelines on any of these things. We have no idea how long this correction may last, but typically things do turn around, and if you extend your time horizon out long enough, the BTC price just always goes up due to the halving events. Then we have Raoul Pal with some alpha here. So whilst we're all enjoying the volatility, I think that is questionable. Actually, I'm quite impressed by how people are taking it as par for the course and aren't overly freaked out. Well, I think he's speaking for maybe himself and a few, but a lot of people are freaking out right now. But here is what we are actually investing in: the fastest rate of adoption of any technology in all of history. So he says that volatility is therefore noise. The white line here is the number of internet users over time, and we are here with the crypto adoption. currently seeing 80% average yearly growth, that is year-on-year growth, and a projection that we hit 1 billion crypto users by just before 2024, and we're under around 400 million right now. And I'm sure you've heard of Raoul Pal talking about the exponential age, and that is what we are part of right now with cryptocurrency. And so if you do zoom out and you do believe these things and you think crypto is here to stay, clearly this volatility will just be noise as time progresses, but of course it is hard to stomach whilst you're living through it on a day-to-day basis. But the trend is going to be our friend, and by the year 2030, so just 9 years away, we should be at around 3.7 billion crypto users if this chart does play out and we maintain the current course. That's nearly a 10x in participants to the market, so you can imagine the size of the market at that point. And I want to wrap things up with this. It's a British-based article here all about the reports of pension tax rates in the UK during the next budget this autumn. So it says that the UK Treasury is lining up another raid on retirement savings to help pay for the cost of COVID. So it seems they're going to increase taxes, reduce the amount of pension that you would receive upon retirement, and in general just leave people a lot worse off as they go into the latter stages of their lives, which is definitely a very bearish thing for anyone who's continually paid into a pension pot during the whole of their career, and you see that the end numbers are just diminishing year on year. It's a very frightening thing. And so I think people realize that they need to hold fixed assets. You need to hold things that are scarce. People buy additional homes if they can afford them. They buy stocks, and now they are buying cryptocurrencies. And I think this trend has to continue as we're going to see further suppression of people's spending power over time by governments through taxation and also inflation. So just be aware of what is actually going on in the real world and that underlying need for you to hold crypto assets for the long term. So there we have it, our crypto roundup for today. Clearly very bearish times right now, but there are some silver linings to be found out there if you look for them. Even whilst the media is on a full FUD storm against cryptocurrency, literally all the news articles I could pretty much see today, we're taking a massive jab at cryptocurrencies. But let me know your guys' thoughts and opinions down below in the comment section. Make sure you subscribe, and I will see you again tomorrow. Goodbye.